Does this imply that Tesla is still the shiny object that everyone wants to catch because of their cost advantage over other companies due to the money they save on dealer networks and marketing? Yes, I believe that Tesla is still one of the very wise decisions at the benchmark here in the EV market. I believe you are aware of, make early on was to pursue almost complete vertical integration where they have control. They truly control the vast majority of the material values that go into their products, so they are the masters of their own financial fate. They are a first mover when you combine that with their highly respected brand. They typically receive a higher price. They are still in the lead. Recently, despite two price target updates, Tesla stock fell 6% in a single day. It's unclear why Tesla stock dropped so much, but the markets aren't the reason for it. After seeing its shares drop to the lowest point in 2 years, Tesla beat Meta to become the worst performing stock among the most valuable tech companies in 2022. However, the company ended the year on a positive note. Following the recent performance of Tesla stock, many analysts have raised their price targets, suggesting that better days may be ahead for Tesla and its investors. Find out why analysts are so optimistic about what they anticipate in the coming weeks. Hey guys, welcome back to Tesla Tomorrow. Leading investment management firm Goldman Sachs recently raised its price target on Tesla for. This came after Elon Musk sold off roughly $23 billion worth of Tesla stock to finance his purchase of Twitter and faced backlash from investors for spending too much time on the social media company. However, just 3 months into this, yet Tesla was already the best performing S&P 500 stock year to date. Goldman Sachs research in a similar Deutsche Bank analysis, Mark Delaney kept the stock at buy. Tesla was reaffirmed by Emmanuel Rosner with a buy and a $250 price point, aimed for the mean analysis. For the upcoming year, Tesla's target price is expected to be approximately $223.20. The majority of analyses of Tesla have been quite bullish, with an average rating of buy. The price of Tesla stock has risen by 8.95 over the last week and 8.67 over the last month, and it is currently above the 200 threshold. How does the price of Tesla stock come to be this way, and what will the next few months hold for it? What come to mind from these analyses? Tesla is continuously monitoring the situation to learn more, but before we do so, please click the like button, subscribe, and enable notifications to stay informed about any updates regarding Tesla. Tesla is more stable due to its high market capitalization and ranking in the top quartile of its industry. Greater than peer returns in terms of risk adjustment, return on equity, return on investment capital, and return on assets, the business has little debt, has demonstrated superior earnings and revenue growth over the last 5 years, along with positive cash flow and positive free cash flow. Additionally, it has a high gross profit to asset ratio, which suggests higher long-term returns. BED's worldwide EV deliveries decreased while Tesla's rose. It's crucial to remember that competition exists for Tesla, even though it's a topic of much discussion. Although some analysis claim that the Model S and X missed consensus, even though these two models are only a part of Tesla's car business, others believe that it is not important for Tesla to get its delivery numbers right as fast as it can. Tesla deliveries hit a record in the first quarter, but the electric vehicle giant fell short of estimates once again. Tesla recently released its first quarter delivery numbers, and there were no major surprises. According to analysis, Tesla's pricing pressure is expected to persist in Q2. In the first 3 months of this year, the automaker delivered 6% more mainstay Model 3 and Model Y cars than it did in the previous quarter. However, the quantity of deliveries of its more expensive Model X and Model S vehicle sales fell by 38%. For the first 3 months of this year, Tesla manufactured 440,808 cars, more than it was able to deliver. TD Cowen claimed that increased transit traffic was the cause of the excess production, and that the Model S and X's weakness was also related to the number of cars in transit. The company raised their price despite making no positive remarks about Tesla. Object: continue as production continues to outpace deliveries, as most analysts are not Tesla's course of action. The recent price reductions by Tesla have unavoidably put pressure on rival automakers who continue to produce more affordable electric vehicles in spite of rising commodity costs. This has caused issues for those who sell used cars and, more significantly, has alarmed Wall Street with talk of mega pricing. Unquestionably, the price reduction has made even ICE models relatively pricey, and even EV manufacturers will find it difficult to reach their sales goals. There are many EVs available, and their quantity is constantly increasing. General Motors, Volkswagen and Ford have been Tesla's main rivals. Although smaller startups are starting to make their way into the market, the recent price cut will make these Tesla rivals difficult to compete with for some time. Right now, the EV market is highly unpredictable, and Tesla has the ability to manipulate it. Miniature marvel, even though Cathie Wood has been cutting back on other investments, she hasn't given up on Tesla. According to a Tesla investor, she recently cut back on her shares so that the company could make up 10% of her portfolio because she manages funds. After selling her Tesla shares, many people said that she didn't really have to sell them because the price that Tesla set made it much harder for American startups like Rivian Automotive and Lucid Group to gain market share in a market where everyone is fighting for sales. Given their crippling raw material and production costs and significantly lower output than Tesla, which delivered more than 1.3 million vehicles last year and is still on track to deliver up to 2 million this year, some startups might not be able to afford lower prices. To increase its production rate, Tesla is taking a lot of steps. According to reports, the automaker's Gigafactory in Berlin will soon grow to a permanent false production line before shifting to boost output. Since Tesla plans to produce up to 10,000 cars per week and 500,000 cars annually, it could be a little awkward to assume that the company is experiencing severe demand issues given that they are increasing production. According to some analysis, one of the main reasons why Tesla stock has fallen so much is because retail investors were anticipating more Tesla deliveries, which is another reason why short-term traders bought Tesla stock and intended to sell it for a quick profit. Increasing inventories is what worries investors a little bit more, even though these numbers exceeded multiple consensus estimates, and since many of these investors have started selling off some of their shares, they may have had some influence on Tesla stock as well. According to Tesla Bull, the majority of these analyses show multiple increases and decreases in inventory, and many of them begin to distance themselves once things start to go south. Kerber Ross, Tesla's shareholders, will soon have to adjust to the new normal as a number of recent developments are finally catching up with the company. He continued by saying that genuine competition is emerging. Many analysts only consider this in the near future. They can trade out of these positions at any time, and their investment horizon is essentially 1 year. Inventory levels are typically a concern for short-term traders, but for long-term investors, this shouldn't be limited to the energy storage and fully autonomous software of Tesla's next-generation vehicle. Tesla recently announced the Cybervault, a new charging system. Tesla claims that the Cybervault is a single-phase, 220-volt charger that can be used to charge any model of Tesla with a corresponding charging performance of roughly 32 amps, 7 kilowatts. The charger has a weight of 13 kilograms and can run a cable that is roughly 6 meters long. Along with plug-and-play charging, scheduled charging or timely departure, and other charging experiences, this device also includes installation. What's interesting is that this device, which costs about $800 equivalently, is actually pretty good value. At this price, Tesla will generate additional revenue from car sales in addition to FSD. This serves as a reminder that Tesla does not actually need to grow at a rate of 50% annually in order to reach a high market capitalization in the near future. What do you think about this? Please share your thoughts with us below, and don't forget to share your Tesla valuation with us. Please click on the following video to see more about what Tesla has been up to in the last few days. Talk to you there.